Good morning, everyone. My name's Adam Schubert. I will be moderating today's webinar on behalf of SCORE of Chester and Delaware County. Our topic today is how to get the best marketing tax deductions for your business. I'll present a couple introductory slides before I turn the program over to our speakers for the day. For those of you who are not familiar with SCORE, SCORE is a resource partner of the Small Business Administration designed to help small and startup businesses through mentoring and educational services. We've been around since 1964 in Chester and Delaware counties. We have about 100 volunteers ready to and able to help you. Our mission is to foster a vibrant small business community through confidential mentoring and education. Couple rules of engagement for today's program. Today's session is being recorded and will be made available to you in a follow-up email after today's session. All participants have been placed on mute to avoid any distractions. Please add any questions you have in the Q&A box. Questions in the Q&A box will be responded to throughout the session and at the end as time permits. Please use the comment box for any comments or references that you wish to share with the audience.
So now we have our presentation that Jeff and I are doing together. It's called How to Get the Best Marketing Tax Deductions for Your Business. I had really wanted to do this presentation with Jeff because I felt it was really crucial from my experience with being a former Small Business Development Center consultant, consulting clients on marketing, and also being a small business owner myself. I thought, I don't know that I've seen anybody doing a webinar about marketing tax deductions. And obviously we'll go through this webinar today and talk about what all those different marketing campaign and website pieces are, but I thought it would be really, really important and crucial for the small business owner community to really be knowledgeable about what they are in preparation for tax season. So I'm going to turn this slide over to Jeff.
Good morning, I'm Jeff Perdall. I'm a CPA shareholder at RLB Accountants. We're here in the Greater Lehigh Valley. I've been doing this probably 30 plus years. We specialize in closely held enterprises, small business, entrepreneurial clients to middle market clients. A little bit about RLB. We were established in 2009. We have a location in Allentown, downtown Allentown, Stroudsburg, and Easton. 5 partners. We have approximately 31 employees, and we have 5 support members. A little bit about our professional services. Next slide, please. We offer the traditional accounting and tax, controller, CFO, bookkeeping services for hire. A really growth area in our practice is remote services, which we refer to as cloud-based accounting services for business enterprises. It used to be called bookkeeping, but now pretty much everybody's using technology to leverage their accounting function, and we help with that oversight. 2 of the portals we use, and a lot of them will help you classify these marketing expenses as much as you need to. We QuickBooks and Xero. Other services, we do business valuations. We have seen in the last several years, especially the end of the pandemic, more and more businesses are looking to maybe be acquired, merge, sell, retire. So those are some services that we've helped clients with. And consulting services, retirement planning. We do some personal financial planning. And again, we do the traditional tax and accounting, work in a lot of industries. I'm not going to go on and on about it, but you can visit our website, which has most of the information available to you. Next. So Carly, I'm sorry, Carly will speak a little bit about her and her background.
Yeah, absolutely. And Jeff and I have known each other for a couple years now, from when I was working at the Kutztown University Small Business Development Center. We partnered together to do a lot of valuable and dynamic webinars on accounting and taxes. In terms of what I do, across the board for 25 years, unbelievably, I've been doing marketing. I've helped increase sales, donations, event attendance, reach and conversions for nonprofits, corporations, and small businesses. My degrees in psych, everything that I do in terms of my recommendations is rooted in consumer behavior and marketing psychology because it really is all about trust and relationships. And yes, I'm a consumer behavior subject matter expert. I've written an online textbook that colleges and universities use because, before we can market to our customers, we really need to know who they are, what motivates them. I do a lot of different things when it comes to marketing consulting for my small business. So I do audits, I do competitor analysis, I review marketing plans, SWOT analysis is huge, doing some content idea brainstorming sessions, right? Helping you problem solve and, learn about how do you do content calendar creation. A lot of coaching and also a lot of optimization of social media profiles. So you know about us, so we definitely would like to know a little bit about you so we can kind of tailor a little bit what our presentation is about today. So first of all, and Adam's going to help us out here, we want to know what industry are you in? So not sure if any of you at all are nonprofits out there. And of course, what sector are you in? But also, if you're a small business, what industry are you in?
If you can just type that information in the chat box, we can get a sense of where the group is. Okay, I have a holistic health practitioner, bed and breakfast, a retail women's boutique, real estate investing,
Okay, great. So that gives a little bit of an idea of, what sectors you are, maybe a little bit of an indication of what particular marketing activities, right, you may be engaging in. And so just curious, have any of you ever written off marketing or advertising expenses for your business? Is that something any of you have ever done?
not yet, yes, yes.
Good. So if you haven't done it yet, that's perfectly okay. That's kind of why we're here, to tell you all the different facets. And again, if you have been writing off some marketing expenses, hopefully this webinar will give you some additional ideas of, hey, I know I've been writing this off, but I didn't realize I could also write that off as well. So that's what we're hoping to really empower you with coming out of this webinar today. And so, yes, so the third thing we would like to know about you is, what is one thing you wanted to learn today in regards to marketing and, tax write-offs? And feel free to go ahead and put that in the chat box.
I've had several people indicate that their chat box is disabled, and so folks are, putting it in the Q&A box. That works
Oh,
also.
sure.
So
Absolutely.
I'm watching both. So. Okay, we are a distributor of branded goods and apparel. Yes, we write some off. Remote services focus. If we discount a room as part of a promotion, is the amount of the discount deductible?
You want me to handle that now or just save that for
Yeah.
later? 'Cause,
Yeah, Jeff, if you don't mind handling that now, that would be great.
Yeah, I mean, essentially, if you're on the cash basis, it says, say you're a bed and breakfast and it's $500 your rack rate, right? And you give a 10% discount, $50, so it's $450. Essentially, you're gonna pick up $450 in income. So that would be what you pick up, not the 500. So essentially, indirectly, it's off of your sales. Your revenue would be reduced. So indirectly, you could call that discount marketing, goodwill, whatever, but there's nothing to really record there because your sale would be, again, $450 on 500 if you give a 10% discount.
Okay, great. No, thank you very much, Jeff, because there's definitely a difference, to my understanding, Jeff, right, between marketing expenses and selling expenses.
Correct. Yeah, we'll get into all that
Yeah.
in a little bit.
Okay, a couple other responses here. How do you write off gas or items? Want to be sure I'm optimizing my opportunities for write-offs. Good session to be attending today. Let's see. I am a PI. Yes, I have marketing expenses. Any write-offs I may be missing? And our product donations for marketing, like raffle basket for a charity event, is that deductible? And changes in 2021 and 2022 we should be aware of.
Okay, great. So I'm seeing a couple questions here that we're actually going to be addressing. So there is a gas component that we will be addressing further on in the presentation in regards to advertising. So we'll talk a little bit about that. I'm also seeing charitable, endeavors in regards to advertising that we will absolutely be covering too. And hopefully, definitely, we'll be hitting upon all the different marketing websites, social media opportunities. So Jeff, I think we're going to go ahead and get into this. Hopefully we can give them some really good tips here.
Oh, thank you. Let's get rolling here and
Yeah.
put your questions in the Q&A and we'll cover them at the end. So the key takeaways from today will be, we'll talk a little bit about income. What kind of income do you need to report? Not only expenses, you need to report your revenue. We'll talk a little bit about website and software expenses, consultant retainers, using a marketing consultant, special promotions and events, marketing, advertising. We'll talk a little bit about that, those expenses, and social media, that's huge. Expenses, platforms, what you're using, what you cannot deduct, and where do you deduct it? So that's kind of what we'll be covering today.
Yeah, absolutely. So we wanted to make sure to tell all of you out there, not only what you can deduct, but also to make sure that you're not deducting something you shouldn't deduct, and also where do you go about doing this? So those are really two key components.
Yeah, I mean, the other thing I will add to it, what we'll talk about, and you should also be aware of, you need to have adequate documentation too. So if you're have an expense, you should have a canceled check. It should hit your checking account as a debit or a withdrawal. You need to have substantiation of documentation if you are audited as to support the deductions. So these are, Carla, you want to talk about the top of the presentation a little bit?
Yeah, absolutely. So some of the income that you should be reporting here. So brand partnerships. So if you're getting, income as a result of doing a podcast or a video channel as part of your business, and you're getting sponsorships, because again, even though we may have a business, we may also have a little side business. going on where we're also running a podcast or a video channel. So any kind of sponsorship money that is coming in should be reported as income. And then vice versa, and Jeff can speak more to this, if you are sponsoring a YouTube video channel or a podcast of some kind, talking about that as a marketing expense as well. Also, in terms of if you're into content creation and you're actually creating video or photo content for a business or company, this kind of falls under, social media promotion as well. That has to be included on your taxes. Then we're pivoting to products. So again, let's say you have brands giving you products to review, such as food, clothing, or technology. You have to list this on your taxes as income at its fair market value. So again, we've got small business owners who are working with influencers to do these product and service reviews, right? But then there are also small business owners who are influencers or bloggers or podcasters who are doing these reviews. And then lastly is ads. So any income you receive from ads needs to be counted as income. So here we're talking more about that income portion, which Jeff is going to cover here in the bottom part.
Yeah, so essentially these might be ancillary to your regular business that you might get for advertising. And so a lot of the channels that the money comes through from, they're going to ask for your EIN number, social security number on a W-9. Essentially, you're probably familiar with that. It's like a W-4 if you're an employer, or if you have an interest-bearing account at a bank, you have to fill one of those out. Has your pay, who they're paying to, payee, information, address, and an EIN number or social security number. So in general, if they pay you over $600, they're going to issue you a 1099 non-employee comp, NEC. And then you have to pick that up on your return. Even if you kind of forgot about it or went into your personal account and didn't go into your business account, you'll have that. You'll see those types of things. And also through a third-party network like Venmo or Cash App, your payments are coming through there for your products or services. They'll come through on a 1099. A 1099K is if you have credit cards. There's credit card reporting. So, unless you're in, I don't know how much you're going to have on this. If your business is a bed and breakfast, your most revenue is going to be your rentals. Maybe you have some ancillary income for some podcast or something like that you're doing as an influencer, and you're paid for that, or even paid for products. You could be given gift cards and they could count that as cash. So, if they're giving out $300 gift cards, and you get 2 or 3 of those, you might get a 1099 from, the influencer or that particular company. So that's a little bit about the income to report. Probably what's more significant here today is the deductions, and we'll spend more time on that starting with the next slide.
Yeah, thank you so very much, Jeff. We just wanted to add that in just in case we did have people reporting income in regards to this. So Jeff, the startup costs.
Yeah, so startup costs, if you're in the startup mode, the IRS generally says you get, it's up to $5,000. They might have increased that to $25,000 of startup costs that you can write off immediately. And that would include marketing, that could include legal, accounting, the number of things. And we'll talk about other ways to write things off outside of startup costs, because startup costs, you essentially need to make an election on your return that you're going to be writing those off pursuant to the Internal Revenue Code. I think it's 195, like either code or 248. I have all the code memorized, but essentially Those are startup costs. So the two factors is cost you pay or incur before the date your active business begins, cost you could deduct if you paid or incurred the expense to operate an active business in the same field once you entered into it. Really, I think a startup costs more of legal and accounting. I mean, you might have some soft marketing costs that you have, but we'll talk about that in a little bit. Most of that stuff, depending on what it is, you'll be able to get an immediate write-off. We'll talk a little bit about websites. That's usually where a lot of money goes in to that. That's probably one of the more expensive media expenses. But I mean, if you're getting like business cards and printed matter and all that stuff, I really wouldn't consider that startup costs. I'd probably just consider that advertising and marketing and write it off immediately. You have to look at whether you have revenue or not. Like if you're doing it late in the year, like now, and you're just getting going and you don't have revenue, you have to look at, do you write it off this year as a loss, or do you write it off next year, even though it was paid this year? Have to consider that a little bit. Let's go to the next slide, please. So definition of marketing expenses is pretty broad. It can be advertising and marketing. And the key is that with any deduction, they have to be ordinary and necessary to be tax deductible. Hold on, let me grab a drink. So like anything else, you kind of do a little bit of a test to see whether it's related to your business. I always say the example of like somebody saying they want to write off their their golf clubs or something as a marketing expense. Well, is it really necessary for business? It might be because you entertain, whatever, but probably not. It's probably more personal than business. And so unless you're a golf pro, maybe a golf pro could write it off. But if you're just an average business person and you go golfing, you can't write your golf clubs off. So it has to be ordinary and necessary for the business that you're in. So you need to look at that. If you're uncertain, what I usually do or recommend to clients, just set up an account in your general ledger and call it Ask My Accountant, and then ask your accountant, their opinion on deductibility of it if you're uncertain. And we'll get into things that are not deductible in a little bit, or deductible as charitable contributions, because sometimes marketing has and advertising have overlap with charitable. An ordinary expense, again, is the most common one that's used and accepted in your industry, whatever industry you're in. And necessary expense is one that's helpful and appropriate to your trade and business. An expense does not have to be indispensable to be considered necessary above or below. So, I mean, really the key is to think about what you're doing and is it related to your business. So website expenses are a little tricky, and there's unfortunately there's not a lot of firm guidance out there from the IRS on it. There's procedures and there's policies and things that we do. If you're launching and developing a website, again, before you start your business, you can deduct up to that $5,000 cost that we talked about if you want to count it that way. Website development generally could, like I had a client that, give you an example, they're pretty much an internet retail business in kind of the green space, green and technology and green. And a lot of their marketing is done through their website primarily. That's how they're selling, and they're delivering stuff through Amazon and some of the other companies, but that's how they're selling. So last year, or it was the year before, I think, they rebuilt their website. They had an outside consultant do it for them. they spent $25,000 on the website. It is deductible. The way we treated it is we put it on the books as an asset, and then you depreciate it over a period of time. It can be anywhere from 5 to 15 years. I mean, I think 15 years is even a little excessive because you're constantly changing and updating your website. I mean, 3 years later, I know right now they're working on their website, and they're working on their website now internally. So they have salaries and things that they're using. They have marketing people or interns that are doing the work that are already on their payroll. So they're actually getting deductions for the payroll to do the coding and the back office kind of thing to update the website. So I would say that ongoing website, that's kind of creation and ongoing website content that, once you should really be able to write that off as an ordinary expense. It's that initial outlay to put the chassis down or build the chassis, building blocks to build that website, that it should be recorded as an asset and depreciated over a period of time. And there's many ways too that you can write it off immediately, depending on the way it's amortized or depreciated. The actual hosting fee is deductible. So if you're, I don't know the name of all the companies out there, but if you're paying a third party, say it's in our market, it used to be like RCN and they're called something else now, Astound or something, and you're paying them to host your website every month, that would be deductible. They'd almost be considered dues and subscriptions, and they're deductible on your return. So the key here is like more when you launch or that first website up front, it will be capitalized as an asset and depreciated or amortized over a period of time. And there's some creativity and some leeway as to how fast you write that off, but at least it's on your books as an asset. So if you go to borrow or something like that, or maybe you have losses and you're trying to slow losses down, it makes it look like you have an asset. Not that a website's worth a lot of money, but some of these big companies that are out there probably spend hundreds and millions of dollars on their websites and building them up front. And I'm pretty sure that they're putting, the initial one on the books as an asset, and they might use internal and external support for the website. So this is a little bit of I don't say a gray area, but the IRS hasn't really ruled firmly on this. So, we'll talk about the other types of marketing expenses as well. So software expenses. So software is, what runs, runs the software, maybe your marketing, maybe your scheduling, your orders, and a lot of that stuff goes hand in hand. So there's 3 categories here: project management, graphic design, and social scheduling. So a lot of these are annual or monthly costs, and you pay a monthly cost, and it would be basically written off as you go on these expenses. So if you're using like HubSpot or Constant Contact, they're big ones. It's a subscription model, and you pay, probably based on your volume or number of transactions. That would be written off as a marketing expense. And we'll talk a little bit about, where you deduct it on the return and how much detail you want. If you want to just call it marketing, or if you want to have marketing/project management, marketing/graphic design, marketing/social scheduling, marketing/website development. So you know how much you spend on each. You could set, like a parent account up call it marketing and have sub accounts underneath it. So you kind of know how much you're spending in each area. Many of the software, you'll be able to go in and run reports from vendors. So if you know, like look up Hootsuite, you'll know how much you spent with Hootsuite. You know, you can kind of do it that way. But generally, these software expenses are going to be written off. And I'm not going to get real technical with this, but sometimes some of these software expenses can be used for research and development if you qualify for those credits. That's a little more complicated here than the scope of this course, but just to say that you can't deduct it and get a credit, you have to carve out, not deduct it, put it as an R&D to get credit. And there are only a limited amount of businesses that can get research and development. You know, like bioscience and those types of some technology companies. So next slide. Consultant retainers. So if you pay a marketing company to create plans or campaigns, that firm or that individual you pay, you would be able to write that off immediately. If you're dealing with a consultant that you pay over $600 to, and it's an individual, you will more than likely have to issue them a 1099. If it's a big agency, that's a corporation, or an LLC. You don't generally have to issue a non-corporate entity. You have to. Corporate entity, you do not. For general for 1099s to who you're paying the money to. So consultant, it could be a retainer fee that you just pay an amount and use them, or it could be pay as you go. So that would be another deductible expense. If you have marketing people in-house, you might not use an agency. You might have a marketing person or an office person that does some marketing and does other things. Well, his or her salary would be deductible as an expense. And you might use an outside agency as well. So that would be deductible as a marketing expense, as where their salary for an individual with the firm, company in the marketing department would be deductible as wages, as a business expense. Next. So there are other things, and this is where a lot of questions come in here. Brand sponsorships, webinars, and promotional items. So brand, a local event, you pay to have your local, say your logo's on a Little League baseball jersey, or just say it's on a cycling jersey, or whatever, a uniform, or your logo's in a program. So it's a brand sponsorship. Up here, for instance, Sunroll Active with the Chamber, we have a lot of brand sponsors for our events, and they get their logo on the material, the collateral material, electronic, paper, whatever it might be. Get a JPEG or of their logo, and on it goes. Well, that would be a deductible expense as well. You could have marketing. Again, you could have that big marketing category where you dump everything in, or you could just have marketing / brand sponsorships where you could put that in. Webinars, workshops, if you're promoting your business, that all would be deductible as well. And again, it's in that broad marketing category, or you could have subcategories depending on how much you want. Promotional items, as you know, everywhere you go, you get a water bottle or a hand sanitizer, or, now maybe you get a mask or a pen or whatever, swag. Those items would be deductible as promotional. So you could say marketing / promotional. I know our firm, we had like pens, we had iPhone holders, we had, those kinds of things, tablets, and promotional items that are there. They could be T-shirts. So they would all be deductible. Now, where it gets a little tricky is when you get into meals, when you get into food, even though it's marketing, they really should be kept into, meals and entertainment. So let's just say you put on a webinar, and it's, say it's live, and you have costs with that. You have some flyers and things like that, and social media you're using. That would be deductible. And then the day of, people show up to the live seminar, and you have promotional items there. Those would be deductible as promotional items. And then, on top of it, you provide breakfast. So you have Starbucks and you have some bagels or whatever, those kinds of things. That needs to be really put into entertainment, meals and entertainment, because the rules are different for those. Generally, your marketing expenses are going to be 100% deductible. Your meals, I believe this year, are 100% deductible. They were last year. And then they go back to 50%. It might even be this year. Everything's a blur with COVID, but I know in 21, they were fully deductible, but you still want to keep it in a separate category because they revert back to 50% deductible. And I don't recall whether that's this year or next year. I know that Congress allowed 100% during the pandemic because they were trying to get people to restaurants and to buy food because, as you know, the restaurant industry was hit pretty hard. And if you have a facility that you're renting, the actual rental of the facility would be deductible. So let's just say it's a restaurant and they have a separate fee or a banquet hall from the food and the liquor and that kind of thing. The banquet hall would be deductible. I would say you could deduct that in its entirety, but the actual meals, a lot of times they don't charge you for the hall. If it's a restaurant, they just build it into the price. So those are some of the things you have to watch out for when you have special events. The other thing you might do is, let's just say, like I know our firm, we have, professional sports tickets up in our market. We have minor league teams here, the Phillies and the Flyers. We have the Phantoms and the Iron Pigs, both affiliates of the Flyers and the Phillies. We have tickets. And so if you're giving tickets out, which is kind of marketing, that really falls under entertainment rules, and that's only 50% deductible. It's not a meal. The meals were 100%, but now it's always been that the actual cost of the event we're giving the ticket out would be 50% deductible. So, last year, if you were going to a Phantoms game and you took a client out, you took them there and you bought them a beer and a cheesesteak or whatever, that would be 100% deductible, but the actual ticket would be 50. And so that changes this year, I believe, to 50 and 50, unless they extended the entertainment another year. I don't think they did, because we're kind of theoretically out of the pandemic. So that's critical to keep detail on your ledger chart of accounts to delineate. You can't just throw your meals into marketing. They have to be separate. And then you might have employee meals, which could be 100% deductible if it's just for your employees and not for your customers. So I just wanted to give you a little bit. The other thing I'll mention here that's not really on here, a lot of times there are sponsorships too, but there's also, you're doing a sponsorship for a nonprofit for the chamber or something. And our chamber here has two chamber entities. We have a regular 501c6, which is a business organization. And most of the money coming into there is brand sponsorships, deductible for you, income for the nonprofit. However, we have a foundation, which is a 501c3. So if you give a check or cash as a charitable contribution to the foundation, that's a charitable contribution. So you have to kind of delineate a contribution from brand sponsorships. And where does this happen the most? On nonprofit entities that you're advertising with or doing business with, because some could be deductible as an ordinary expense as advertising, and some could be if it's a 501c3 going in there, it's a contribution, and they're handled differently they're deductible, but charitable contributions has some limitations and how it's reported. I'm not going to get into that, but I'm just making you aware of it. Next slide, please. So again, these are just some more things that will be out there that are deductible. To give you examples, SEO services are deductible, like Google Ads and all those kinds of things you're using. Paid ad, banner campaigns, except watch political, not deductible. So I know there's an awful lot of that going on right now with the midterm elections a couple weeks away. They would not be. Paid media, again, Google AdWords or pay-per-click campaigns. Print advertising, I mean, people still use, old school print advertising in addition to social media and other things. So, if you do trade shows and you have banners made and brochures, flyers, mailers, postcard, you're creating content and brochures. The creation of those, you might pay a company or a graphic artist, designer to do those. That would all be deductible. And kind of old school ad space in newspapers, magazines, and billboards would all be deductible. And then you get into multimedia advertising, TV, cable, radio, which can be very expensive, but they would be deductible. And so those would all be, so temporary sign costs, advertising, basically are advertising expenses. Permanent signs that last more than 1 year, long-term assets, not advertising. We talked about that. That was more like on the websites and that type of thing. Your car, some people will say, well, my car's a long-term asset. I have a Mini Coupe, and I have it wrapped with my bed and breakfast logo on it. It's blue. Can I write off the entire car? Well, they're two to get the bifurcated. So, if the wrap cost you, $5,000, you would probably deduct that at the business percent. And then the car, you'd have to be subject to your automobile rules. So, like we have clients that, have trucks, and they have like their logos painted on the trucks. And the trucks generally are 100% business because it's a fuel oil dealer and they're driving trucks around with their logo on it. That would be deductible. But if you're a bed and breakfast and you're driving around in your Ford Bronco, again, it's blue and it's wrapped, I would think it'd be a little excessive to write off the full amount of the wrap, whatever that cost, maybe times the business percentage you write off. And then you look at the car and say, how much am I really using that for business? That's a whole other class. But those are the kind of things when things kind of get mixed together, and you have a long-term asset with another marketing thing and how you have to bifurcate it. Next, please. Social media expenses. So, we're all on social media. We all, use it, and there's fees for marketing on LinkedIn and some of the Facebooks and all that. Those would all be deductible. Again, we'll talk about that on where you deduct things. It's, do you want to have marketing / social media? It's how many categories do you want? How much detail do you need? The IRS basically just says if it's deductible and it's ordinary, it's related to your business, as we talked about before, it's deductible. If you have one line item that says marketing as another deduction, that's fine. Now there is a little bit of a difference between, and we'll get into that in a minute. There is an advertising line on the return. It's kind of a gray area. I mean, a lot of times we just use the old school advertising on the face of the return as a deduction, and we call everything else marketing expenses, because as you see, there's so many different expenses out there that relate to advertising and marketing. So, okay, next slide, please. Goodwill advertising. So, these are examples would include, these are institutional goodwill. It'll create, goodwill today will create gains in the future. So advertising, you see a lot of this related to like charities or Little League or, all those kinds of things. Maybe a car wash or a fundraiser or something like that. And you sponsor or you give away products. And this is like where it comes into a lot of questions. Well, like, we're doing a golf outing, but we're giving swag out. We're giving, golf ball, golf tees out and golf ball washers or something like that, or to wash your ball with our logo on it. And you're giving it to a chamber golf outing or something like that. Well, and you're not really attending the event, but it's like the third bullet here, giving away product samples. So even though you're not in the golf business, you're advertising, that would be like marketing product samples, whatever you want to call it, holding content tests, putting away prizes. Those would be other things. So this is goodwill advertising. And again, you have to delineate this from charitable contributions, which we talked about. Next slide. So what not to deduct, we talked about that already. Advertising as an indirect or direct political contribution, not deductible. Advertising in any publication used for political anything with politics, not deductible. So that's the first three bullets. Anything that's hobby, even though they have some promotion, not deductible. So, again, the golf club situation that I talked about, rating your golf clubs off. I mean, you could say it's a business, but it's really like a hobby or a passion that you have. You can't, maybe you can write the golf off, the rounds of golf, to take a customer out as entertainment, but not your clubs. Expense associated with R&D, research and development. We talked about that. If you're going to get a research and development credit, you can't include those as advertising or product development costs. So they have to be one or the other, not both. You can't double dip. Cost of operating or driving the vehicle and add on it. We just talked about that. You have to kind of bifurcate and look at them both separately. Unless you're a contractor and you have a pickup truck or a big dump truck, you're a landscaper and it's used 100% for business, and your company's logo's on there, and they put the logo on with the truck when it was delivered. Well, yeah, you would include that. The truck was $80,000 and $5,000, put the logo on, you'd be able to write off subject to rules $85,000. You wouldn't have to delineate those separately. Next, please. So where to deduct? Depending on what type of entity you are, if you're a sole proprietor, there's advertising expenses. Again, you can put them there. What a lot of times we do is we call them marketing expenses, and we show it as other deductions. And so, you could do one or the other, or both, depending on how you want to delineate it. Partnership, multi-member, advertising expenses, line 20, or it could be other deductions, on line 20. And then corporate returns go on line 22, or they could be another deduction. So most of the business entities do have an advertising expense, a hard category for that. You could put it in there. Again, we also put it in marketing, and we might break marketing down a little bit more too. We might have marketing, social media, marketing, website marketing, the various categories, search engines, and those kinds of things. It just depends on how much detail and how big the numbers are relative to your revenue, because you don't want like a large, just huge number in one category, because it's going to be looked at if it's not reasonable, if it's reasonably high. Like if your revenue is 10,000 and you have 20,000 in advertising, but it's a number of things, you probably want to break that out in more detail into subcategories under other expenses. Next, please. So that is it. We're at about 10 of the hour. So I guess I want to thank you all for participating and listening. And at this point, we'll open it up to questions in the chat box. If you have further questions now and you're still here, feel free to put those in. And I know the chat box isn't working, but maybe the Q&A. So I will turn it over to Adam at this point to ask some questions for Carly and myself.
All right. Thank you, Jeff. I do have several questions here. So first of all, how do you write off gas or item, tolls, car insurance, etc., for use of the vehicle?
Yeah, that's a good question. You can either use the standard mileage rate, which is approximately 59.5, 60 cents, that goes up, times your business miles, or you can use actual costs. So you can depreciate the car, you can record gas, insurance, times your business percentage. You can include tolls in there. In the IRS rate, which is the standard mileage rate, you can Google that. I mean, I think it changed this year because gas is going up so much. They changed it in July. Approximately 60, 65 cents a mile. In that is gas, depreciation, insurance, everything is implicit in that rate. It's probably the easiest way to write your mileage off, keep track of your business miles. And business, again, commuting doesn't count, but if you work out of your home, generally the minute your car leaves the driveway, that's business miles. But if you have an office, the distance between your home and your office is generally commuting, unless you stop at a customer first, or then return those miles into business miles after your first stop. Good question.
All right. Next, any changes in 2021 and 2022 that you'd like to highlight?
Not that I'm aware of. Not really. It's been kind of quiet. I mean, there's some stuff in the retirement area and some other things, but I'm not really gonna go into that. The one thing I mentioned, and I'd have to confirm that, is the meals and the entertainment. As I said, that was 100% deductible in 21. I think it reverts to 50% in 22, which we're in now. So that's why it's important to keep everything separate. Again, the standard mileage rate is going up. Things like that. I mean, some things are indexed for inflation. Tax rates haven't really changed. We have midterm elections, and then we'll have a presidential election. So really not much has changed at this point.
Okay, next question. What if the client does not give you a 1099? Is it your responsibility to chase the client?
No, I mean, technically, it's really their problem because if they don't issue a 1099, there can be backup withholding on that. So if somebody, the payor paid, say, $100,000 to you and they can't find you, the IRS could come back at, like, say, 30% and have backup withholding on that $100,000. And it's not on you, it's on the payor. But you still have a responsibility to pick that up as income, even if you didn't get a 1099. I mean, and you don't know the amount. I mean, I guess you have to do your best, document, you've contacted them, whatever, and pick up an estimate or a reasonable amount that you feel. I mean, most seasoned, legit businesses are going to have you fill out a W-9 up front. I mean, even, like for example, if we use a payroll service and they have like influencer gift cards or things they give out, well, they want our EIN number because they're going to issue us one. So again, your big platforms, your Amazons, your big providers that are out there that are moving money around are going to want your EIN number, or they're not going to. Some of the smaller outfits do not, but really the onus is on them. But you still need to pick it up as income.
Okay, thank you. Next question. What about acting at a show or modeling clothes? Can you write off supplies or setup for the show? Could you write off, would this be brand or promotional?
Yeah, I would say all that. If you're doing a show, like a trade show or a show in your industry, all those expenses would be deductible. So if you have a banner and you have travel to go there, maybe there's a fee for the show, that would be deductible. The clothes and the samples that you're showing, you could write those off as samples. Some clothing places, like we have we work with like a bridal franchise or something like that, and she just has samples. Usually we just write those off because they change, and then she just sells them. You might have some meals there. Again, they'd be the 50%, or they would be subject to the meals limitations. You might have a hotel room there. Like I said, travel. Maybe you take an employee with you, and you pay him or her. That would be deductible. So you just, pretty much everything there, because you're there for business, would be deductible in one way or another for a trade show or a show.
Okay, thank you. Next one. We've got a holistic health practitioner who charges an hourly rate and also receives money for product sales, which is going into a separate business entity for the product sales and the hourly rate. Is there a separate 1099 for products versus services here for when it's over 600 a year, or how does that work?
Yeah, it would be, there's 1099 MIS, miscellaneous, and there's 1099 NEC, non-employee compensation, which is generally services. So it could show up on a 1099 MIS, miscellaneous. Generally, products are not, but if you're selling products, like I've had some direct sellers over the years for like Arborn and some of those types of things, Southern Living, whatever, and they would always get 1099s, or you have let's say I have a guy that had a bread route, Thomas's English Muffins, and he'd be selling English muffins. Well, he would get a 1099 for the amount of muffins he sold as like a distributor. So the answer is more than likely yes. It would just show up on a 1099 MIS.
Okay, thank you. Next question. For webinars and online courses, could we write off the Facebook, Instagram, Google ads, web hosting fee, plugins for website functionality, and fees Eventbrite collects off the each ticket?
Yeah, I'm kind of trying to, I don't know if I totally understand that question. I mean, maybe maybe it could be rephrased a little bit. I'm not a marketing guy, but I would say all that stuff would be deductible. I'm not sure what the question is, if you have to break it all out, or maybe that question could be reworded. I'm not sure.
Yeah, it sounds like we've got a mix of marketing items, ads, web hosting fees, and website stuff. And then separately, we have fees that Eventbrite charges for administering the tickets.
Yeah, I mean, it depends on how they're billed to you. Like if they're all billed through Eventbrite, or if they're separate. I mean, again, you could put them all in the marketing, or you could figure out what broad category that, like back in the slides, what that fits under, and have marketing slash, user fees, marketing slash Eventbrite, however you want to break it out, but it's deductible.
Okay. Next question. Are gifts to customers deductible, such as, they have an engagement or, some life event?
Okay, so if you have a customer and you go to a wedding, is that, maybe get a $200 gift? I don't know if that's the question. Is that deductible?
Yeah.
And my answer to that would be no. Or you go into an engagement party or whatever, even though they're still a client, that's personal. I mean, you could stretch it and try it, but I think it would be challenged. I'm going to a wedding, or I was just at some weddings, or wherever, and I give a contribution. I usually give that on my personal checkbook, even though they're a client.
Okay.
So, yeah.
Okay. We are, I have a few more questions, but we're at the close of the hour here. So
how many more do you have, Adam?
Let's see. I've got 1, 2, 3, 4, 5, 6. I've got like 7 more questions here.
Well, let's just hammer them out.
Okay.
Yeah.
All right. Thank you, Jeff.
Yeah.
If we ended the year below $0 as a startup, after personally spending $25K on education with programs and webinars, max up the startup costs right up, and have other money in the sum that's greater than a few $1,000s we made in years 1 or 2, can we carry over expenses to deduct, in future years? So can I carry over a loss?
Yeah, or you'd be able to take the loss in year 1, even if you don't have revenue, because you'll be on cash basis, so you have to kind of write the expenses off as they're incurred and paid, in general, and you can do that. I mean, like right now, especially if you start a business late in the year, you might not have revenue in January, but you might have some expenses that can be taken right now. If they have to be capitalized and depreciated, say like a website, and say the website's $25,000, it goes over 5 years. You take $5,000 this year and $5,000 in the future years. So that would kind of carry over in that sense. That would be an example.
Okay. The next question, in cases we hire virtual assistants in or outside the U.S., as an example, the Philippines, to do work for several hours a week, how do you expense that?
Wow. I'd assume that's just like a office expense, if you're using virtual, being that it's international. I don't think that's a problem. I mean, accounting firms, for instance, will use data input for, over in India, we'll use, I'm not saying we do, but I've heard of firms that do that. It's kind of the same concept. So that could be just deductible under outside services. You just have to be careful that they're not employee and that they're, bona fide independent outside contractor. So you're not, obligated for other tax issues and other things.
Okay, next question. For those of us working at home and making all money exclusively doing online Zoom calls with clients, do we have the freedom to incorporate in any state of our choice from a virtual mailing address and checking account in that state? And, so what are the rules with regard to state of residence, I think, to generalize this?
Yeah, I mean, that's a pretty complicated question. I mean, with the virtual world that we're in, a lot of the states have rules. If you have economic nexus in their state, you could be subject to income tax on all those states once you hit a certain revenue threshold. But generally, you're going to have one state that is your domicile or your home state. Even if you're doing business virtual and you say, well, all my files are up in the clouds. Well, what state are you sitting in with a computer? And that would kind of be, your base of operations. You'd have to go from there, and you very well can't. You have to be somewhere. Somewhere has to be your home state, and it's probably where you're spending most of your time, where your computer's set up, or what your mailing address is, a number of other factors. But that's a complicated question, kind of outside the scope of the seminar.
Okay, thank you. Next question, any guidance on what we should charge sales tax for?
That's a great question too, and that really depends on the state that you're doing business in and what you're doing, and what your operations are. Every state has different sales tax rules on products and on services, and some things are taxable and some aren't. So you really need to get professional advice on that in terms of from an accountant on what you're doing, what states you're doing business in, to determine whether you have sales tax or not. You also could have use tax and where you're purchasing items from other states, and the states are auditing this. So this sales tax is a highly audited, contentious area right now because of the virtual world we live in. And there's rules, as I said, they're called economic nexus. So generally, even if you're not in a state, you're doing business in a state, and that state has, you might be subject to sales tax and withholding. And that's kind of like Amazon. They pretty much withhold sales tax everywhere because there's an Amazon in every state, a warehouse. So, first, is it a taxable item? Second, it's a complicated area. I can tell you that. You'd seek some professional advice before you start.
Okay, and thank you. And one last question. When we sell an asset, like 1,000 printed postcards, we charge a sales tax for the card and the sales tax for the graphic design. Not sure I quite understand that question.
Again, it depends on the state rules. I mean, some states might say the consulting fee to set the cards up, the graphic design is not, but the printed matter is. Or a state might say if it's billed separately, one is, one isn't, or they both are, or how it's presented on the bill. Again, get some professional advice on that.
Okay. Thank you, Jeff. That's all our questions today. I would ask if our audience can stay on for a moment to respond to our poll that I'm just launched. And I'm also have a couple closing slides to share with you. And SCORE offers all of its mentoring and educational services at no charge. If you're interested in getting a mentor in order to help you with your small and startup businesses, you can reach us at our website or call the phone number that's listed here for assistance. This will be repeated in the email that we send you later today. Our offices are located in the Chester County Government Service Center in Westchester. We do mentoring, mostly virtual these days, or we can also do it by phone or email or in person if you're so interested. For general information about what our services, and you can contact us at any of these locations. You can request a specific mentor, or we'll find one who has the experience to help you with your specific needs. So many thanks again to Jeff and Carly for an excellent presentation today. Lots of very helpful information that I'm sure everyone in our audience can use. So with that, I will close our session. So thank you.